Hey everyone, welcome back to the channel. I'm Iggy, and today we're focusing on Singapore Airlines, one of the most watched stocks on the SGX. With its latest earnings just out, there's a lot to break down. This update is especially important for anyone tracking the Singapore market or holding SIA shares. Let's start with the Q1 numbers for the period ending June 30th, 2025. Singapore Airlines reported a net profit of 186 million Singapore dollars. That's a big drop, almost 59% compared to the same quarter last year when net profit totaled $452 million. This result surprised analysts, who had estimated much higher numbers and sent a clear signal that some serious industry challenges have arrived. What caused this big dip? Two major factors dragged profits down. First, SIA faced lower interest income. The company is holding less cash due to debt repayments and investment activities, and interest rates have started to ease, which also hurt returns on reserves. Second, and even more critical, SIA absorbed a large loss from its 25.1% holding in Air India. For this quarter alone, SIA recognized about 122 million Singapore dollars in losses from Air India, a reversal from last year when associate companies, including Air India, contributed positively. Why is Air India such a big factor now? In November 2024, after the merger of Vistara with Air India, SIA began equity accounting for Air India in its results. The integration was expected to help SIA capture growth in India's massive aviation market. However, operational troubles at Air India, including increased costs and severe disruption following a tragic crash in June 2025, have resulted in mounting losses for the group, with Air India cutting international and domestic flights after the crash and suffering from reputational and operational setbacks. Further losses from this associate may continue in the near future. Despite these challenges, demand for air travel remains robust. SIA and its low-cost airline, Scoot together, carried a new record of 10.3 million passengers this quarter, up 6.9% year-on-year. Passenger traffic grew 4.1%, slightly outpacing capacity expansion, and the group passenger load factor rose 0.7 percentage points to an impressive 87.6%. Planes have been flying nearly full, but the record demand wasn't enough to offset falling ticket prices. Because airlines worldwide have ramped up capacity, including many regional and global competitors, SIA's passenger yield, what it earns per revenue passenger kilometer, fell 2.9% to 10 cents per kilometer. This marks a key trend. While demand is strong, competition keeps pushing down airfares across the board, so SIA's earnings per passenger have dropped. On the financial side, the group's total revenue ticked up by 1.5%, reaching $4.79 billion, but costs outpaced income. Total group expenditure increased by 3.2% to $4.4 billion. Fuel expenses dipped almost 8% thanks to lower oil prices, but non-fuel costs jumped 8.5%, with staff, maintenance, and inflation playing a big role. Group operating profit was $405 million, down nearly 14% from the year before. In the cargo segment, SIA faced headwinds as well. Cargo revenue dropped 1.9% and yields were down 4.4%. The cargo load factor also slipped, with cargo growth lagging capacity increases. On top of these business results, SIA was impacted by flight disruptions due to Typhoon Koumei in July 2025. Several flights to and from Shanghai and Hong Kong were canceled or delayed, causing additional complexity for operations and customer management. Now let's talk about the share price and analyst reaction. On July 29th, as the results became public, SIA's share price fell sharply in early trading, dropping almost 9% before recovering slightly to close down around 7% for the day, at about $6.94. By July 30, SIA was trading near $7.04. In response to the profit miss, multiple analysts downgraded their ratings and targets for SIA. Maybank cut its call from hold to sell, trimming its price target to $6.75. CGS International moved from hold to reduce with a new target of $6.80. JP Morgan also downgraded SIA, now seeing limited upside in the short term after the profit disappointment. Some analysts have reduced profit forecasts for SIA by up to 29% for the next few years. citing rising costs, weak cargo, and ongoing losses from Air India. The overwhelming view is that SIA stock price had gotten ahead of fundamentals, and investors are advised to proceed with caution. For current and potential shareholders, the SIA dividend is especially important. The ex-dividend date is set for August 8th, 2025. Shareholders of record as of August 12th will receive a final dividend of 30 Singapore cents per share to be paid on August 27th. This is down from last year's total dividend and reflects the weaker profit outlook and a lower payout ratio of 47% compared to nearly 80% in the previous year. Looking ahead, management has reiterated a focus on cost control, network flexibility, and robust balance sheet management. Cash and bank balances at the end of the quarter stood at $7.8 billion, while shareholder equity reached $15.8 billion. Despite the profit setback, SIA's financial footing remains solid, with access to significant liquidity if needed. For those invested in SIA for the long run, keep an eye on global competition, inflation dynamics, and Air India's results in the coming quarters. If you are counting on dividends, note that the payout is trending lower, but the group is still maintaining a historically reasonable yield of about 4 to 5%. In summary, Singapore Airlines still leads the regional aviation space in many ways, with strong demand for its core services. The sharp dip in profit, though, is a wake-up call about the risks that come with major cross-border investments, intense competition, and industry volatility. Market watchers, be nimble and don't get caught relying on the past. Expect more share price swings in the coming months as the industry continues to adjust. That wraps up today's urgent market update. If this breakdown helped you understand what's really happening at SIA and what to look out for if you own or watch SGX stocks, be sure to like, subscribe, and share. Premium members, you'll find more deep dive reports and real-time alerts waiting for you. And don't forget to check out my other video on navigating global economic headwinds. Link below. Stay smart, stay informed, and I'll see you in the next one.